there was this one individual that was also from the crypto space, and he was on the stage, and everybody else is dressed in suits, and he walks onto stage and he says to everyone, guys, I'm from a startup, we don't wear suits. And he says this in a conference with all C-suite executives.
Yeah.
You don't have to wear a tie, but he rocks up there with sneakers and t-shirts. It was actually quite amusing.
Hello everybody, this is Gray Jabesi and this is another episode of the Gray Av podcast. And this is a show where I interview all sorts of people, but specifically those who have skin in the game, who are talking about what they do because they're doing it or they have done it a lot. So I interview people from all around the world with the end goal is to learn from them. So today is no different. We have Giovanni Lesna Maranetto, who is based in South Africa, Johannesburg. And I met Giovanni at the Blockchain Africa conference, and then after that we connected, and we actually been on a project together, and we did this podcast in Joburg at Blockstarters. So Giovanni is a banking risk professional, a fintech entrepreneur, and he's an ICO advisor and blockchain strategist, and he also is involved in OTC deals. For those of you who do not know what OTC deals are, in the cryptocurrency market, these are over-the-counter trades or deals. So I hope that gives you an idea. So he is also the COO of the Hedge token, according to ICO Bench. So I hope you guys enjoy this. ICOs were a very, very big thing in 2017 and 2018, especially 2017. And Giovanni was really involved into a lot of those. So he has experience in those. And I was just trying to pick his brain on those. It's like what are the things that are looked into. And we also talk a little bit about how he got started. Because it comes from the corporate world, and he moved into the crypto space. So I hope you guys enjoy it. Stay awesome. And if you wanna get in touch with Giovanni, he is Gianni Lesna on Twitter. So it's at GIANNILESNA. Anyway, enjoy my conversation with Gio. Okay, so you wanna introduce yourself?
So my name is Giovanni Lesna Maranetto. I'm the Chief Commercial Officer at blocktrade.com, but I also do quite a bit of advisory for ICOs and startups in the blockchain and crypto space. So as you were saying, it is quite an interesting conversation. I basically introduce myself as a business starter at parties. But I consult on various use cases of the actual blockchain technology. But I assist startups more on the strategy side of things, so how they can actually monetize their business models and how they can use more strategic advisory to achieve their goals.
Right. And just give me a little bit of background of yourself before the whole ICO space. What were you doing? Because this is it's a new space. I'm just curious. What were you doing before that?
So before that, I actually come from the old financial world. So started off in mutual funds or unit trusts. Working at Allen Gray, providing kind of support to financial advisors, institutional investors, and retail clients. Moved through to banking systems. So in essence, management consulting, implementing trading systems for banks with the various vendors that they had. So I was a senior business analyst. But before all of this, the interest actually started about 5-6 years ago. When I was studying abroad in Australia, got exposed to Bitcoin. So it was quite interesting. Started watching it from then, and essentially hobby turned into profession.
Okay. What's more interesting about this to me first is a lot of people look at the crypto space as something where you just invest and then you wait for your return. But you went in as an industry where you can work within the industry and bring your own skill sets, what you have learned from the traditional banking or investments. So what was your transition? Like what opportunities were you facing? Like, you know what, if I had to quit my job right now, that's what I would do.
So basically, ended up looking, started trading myself in the crypto space, and started seeing opportunities within the arbitrage market. So as you mentioned, you always look at your background, that actually gives you that insight to what you need to do in the next move in your life. So I started doing a couple of arbitrage trades between South African crypto exchanges and international exchanges, and ended up, forming part of these trading groups. And then realizing, from the mutual fund space or the unit trust space / index funds, realizing that, the crypto space is quite complicated. Why not create an index style fund that can track the top 10, top 5 and top 30 cryptocurrencies? Make it quite easy for, your mom and dad to even participate in cryptocurrency, instead of having multiple keys and wallets, and only specific cryptocurrencies are offered on specific exchanges. So you can see there's, the cryptocurrency market was quite complex. So kind of synthesizing all of the complexity of the market with the prior knowledge that I had, ended up forming part of a group, which then ended up turning into blocktrade.com, which is what I'm currently doing now at the moment.
Your childhood, like, what were you interested in? Were you thinking that I want to work for Iron Gray one day, or?
Well, you're gonna actually laugh. I've been selling things ever since I was in grade 7, selling my mom's lunch, selling spin tops. So I've always found opportunities in markets. So strange enough, I've always had that trading and entrepreneurial ability in me. So I think you're right. I didn't really know where I was going to land up, but you end up kind of pursuing your natural aptitude in life. So ended up, like I said, in essence, doing business development for the ICO space and blocktrade.com, as well as creating a network of strategic partnerships to actually grow the business, but also assist ICOs and startups navigate through this kind of web of lack of information, and how do they actually understand the space and comprehend it. So that's kind of where I kind of bridge the gap between, an ICO with an idea and linking them up with the correct people that they need to actually fulfill the idea. But it's not only that, it's also bringing that business aspect. Because a lot of them in the ICO startup space, they've got good technical ability, but they don't understand the business side of things.
Right.
And at the end of the day, I think we're all in it, to make money from it. But we're also in it to see a company grow and sustain itself for many years. So you don't want to be seen as a one-hit wonder. Or you raise, $5 million and you don't exist in a year's time. So that's kind of
just what happened to a lot of them.
Exactly. So we're seeing an unprecedented amount of funds being raised through the initial coin offering mechanism. So very similar, for listeners out there, it's very similar to how you'd be raising funds through a stock exchange.
Okay,
so an index fund is in essence a basket of assets, or a basket of, when I say assets, it can consist of shares on the stock market, bonds, it can consist of foreign exchange, gold, cryptocurrencies, or crypto assets. So what happens is an index fund, in essence, is a composition of, like, say, 20% gold, 20% property, 20% shares, and it's a risk diversified investment. So instead of you going and doing research on each underlying share, it basically gets added together and you can invest into kind of an index. So what's happened is, within the crypto space, we found that it's quite easy rather to end up creating these baskets that, as an example, the crypto top 30 makes up 90% of the entire market capitalization of the crypto space. So we're looking at about just under $400 billion. 90% of that is only coming from the top 30 cryptocurrencies. So when you invest in that, you're actually investing in the market as a whole, and you're not just picking one specific winner. Because what will happen is, currently a lot of people are just investing in Bitcoin or Ethereum. But what about the smaller ones? The smaller ones have the greatest growth, but at the same notion, what if, Neo or Elastos are going to be kind of the next Ethereum. So with these index funds, we end up giving your average investor or speculator the ability to invest into a diversified basket.
Okay, so in other words, if I say an index fund is a diversified portfolio, it's pretty much what it is, right?
Correct, yes.
Right. And now we're jumping into ICOs. I mean, we have covered this subject before in other crypto-related episodes, but just explain what an ICO is, since you were an ICO advisor yourself.
Sure. So ICO is an initial coin offering. It's synonymous or means the same thing as an initial public offering. So what that means is companies, we'll take Facebook as an example. Facebook started out of Harvard University with Zuckerberg starting it. But what happened was they raised capital, and to raise additional capital to expand the business, they end up selling shares in the company, and they float that on a stock exchange, whereby average people can take their $50 or $100 and invest into Facebook and get a share in return. So ICOs have now been facilitated through the use of smart contracts on the Ethereum protocol or Waves protocol, and what that allows is kind of crowdsourcing. So you at home, if you have $10 and you really like an idea, you can actually take that $10, give it to the company, and the company will give you a token in return. And that token will essentially be a claim to some type of usage in the ecosystem. Maybe it could be a claim to some type of return. And this is what the crypto market has facilitated. So you no longer need to go to a stock exchange, and you no longer need to be a venture capitalist to actually participate in an initial public offering.
Yeah.
But initial coin offering allows anybody to essentially become that person. And I think that's why it's going to change, the essence of even the African landscape, because a lot of funds actually comes from abroad. But if you can raise $1 million, so that's $1 for 1 million people, you've raised $1 million, and you can actually achieve a goal instead of going to an investment bank or private equity firm and they invest maybe $250,000 each. You've also got a distributed kind of contribution network.
And equity as well, that means that they're going to demand more because they feel like they're losing more by giving away that amount of money at the same time, like at once.
Exactly.
Yeah. So you're advising most of these companies, but you're based here. During your corporate days, were you based here in South Africa?
Yes. So I think South Africa at the moment is uniquely situated. So a lot of the clients I deal with are from Europe, Australia, and out of the United States and Canada. So we've got the time advantage on our side. So what they like to do is while they sleeping, I'm awake, and when I'm awake, they're sleeping, and then we do have a couple of overlap hours. It's just by chance that I'm also situated out of South Africa, but having attended quite a few global conferences, we do see that Africa as a continent is slightly behind the trend when it comes to blockchain technology use cases, and that leads to many opportunities. So I do see Africa as a continent of opportunity for blockchain and its use cases, and I think that places me uniquely in this environment to see the difference and to assist even startups out of the African space actually achieve that goal.
So, and block trade, how did you get involved in that? What's the role that is playing in this space right now?
So blocktrade.com initially started off as kind of a group of people in the arbitrage space, realizing the potential for creating index funds or mutual funds, as we were mentioning, those baskets of cryptocurrencies or portfolios. And what we realized was already 2-3 years back, we realized that regulation is here to stay. So there's no point, saying that, oh, look, initial coin offerings, Bitcoin, blockchain technology is completely decentralized. We don't need governments. We've also seen, if you look in history, a lot of the adoption of new technologies have kind of rapidly diffused based on how governments control and regulate certain industries. So obviously seeing the unprecedented growth in the blockchain space with Bitcoin growing, we already saw this 2-3 years ago, that regulation is going to come into play. So what we've done with blocktrade.com is we've applied for a multilateral trade facility license in Europe under MiFID II regulation. And what this just kind of means in general is we are applying for the correct regulatory licenses to operate as a mini stock exchange. And on this mini stock exchange, we're going to be offering 3 product offerings. One is fiat to crypto. The second one is the index-styled funds, as you mentioned, like Crypto 30, Crypto 10, Crypto 5. And then the third one, which is quite unique, is what we call tokenized assets. So on our digital asset exchange, we're going to have these 3 offerings. But what's also unique about this is we are going to be the gateway between the institutional market and the crypto market.
Yeah, because of the regulation aspect of it.
Exactly. So banks can only deal with other regulated entities. And we find that this is a huge opportunity. A lot of exchanges out there are, even though they're complying with KYC and AML, anti-money laundering and know your customer requirements, they actually don't really have a proper license to operate as an exchange.
Right.
So we find that will add an extra layer of protection for consumers and investors. But at the same notion, that's such a huge opportunity because we could get JP Morgan or another bank plugging into our platform and doing huge volume trades. And that not only benefits the end user, so you actually diversifying your portfolio in the crypto space because you wouldn't want to miss out on these returns that you could be getting, but it also benefits the crypto market as a whole because at the moment we've seen there's been a bit of a slowdown in the market capitalization of the crypto market because of the lack of funds coming in. And usually what happens is it rallied in January. A lot of new money was coming in from retail investors, but institutional investors are the ones who are actually going to take the crypto market from here to where it really needs to be, and for that mass adoption that's required.
So, but in what you think from that point of saying that if institutional investors are the ones that are going to push this thing all the way, if they feel secure enough to actually get involved, when do you think that's going to happen, and what should happen for them to actually be like, okay, I think now we're in? And from your travels across Europe and America probably, where have you seen kind of a good environment for institutional investors, what the governments have done, what they have done wrong or right in general?
So, it's quite difficult to say exactly when, but I do think within the next 2 years, we're going to have quite a clampdown on unregulated activity. So definitely governments are going to start putting rules and regulations in place they already have started. We saw Switzerland, the Financial Market Authority, come out with laws around cryptocurrencies. We've seen the Security Exchange Commission in the US clamping down on Centro Coin, a couple of other ones, that are operating as technically scams in their view. We've also seen BitConnect and other cryptocurrencies kind of disappear and fall by the way. And because of all these bad actors in the space, regulation is definitely coming. I just can't tell you when. But what we've seen is there are some countries that are looking at this as a new source of revenue for their populations. So looking at Liechtenstein, looking at Switzerland, Slovenia, Dublin, or in Ireland, and in Singapore as well, we're seeing a lot of these financial technology hubs kind of embracing the technology, putting it in a sandboxed environment, seeing, kind of play it safe approach, but at the same notion, they're actually nurturing the technology. Whereas we've seen other countries come out and absolutely ban it outright, China, India, and it's not just the actual cryptocurrency, it's the actual technology behind it, the blockchain. And you can use the blockchain in essence across any use case that has an asset or a identity behind it. So you can use blockchain for property deeds and property transfer. You can use blockchain for storing information securely. You can use it for securities. So it's got many use cases, also for payments. And I think countries that are going to embrace that are going to actually have the greatest advantage in this kind of race towards being the next Silicon Valley. So we've seen like a Zug in Switzerland is called Crypto Valley, because it's kind of seen as the industry cluster of where all these big startups are congregating and sharing ideas. So going back to also what you were saying is, I think that uniquely also places us at the heart of this regulation movement. But at the same notion, it allows banks or financial institutions to operate in a way where they feel secure. Because the main issue is the source of funds. So where's the money actually coming from? And the anti-money laundering regulation. So once kind of those two aspects are sorted, I actually don't see the issue with offering an alternative investment in the space.
Right. So from the examples you have given, we see what Switzerland does. They kind of make it a good party for everybody who wanna, take money out of, all the big countries. They have a regulatory frame that's open to a lot of people. Even crypto is kind of fascinating. And Cayman as well seems like it's going the same direction. What are the drawbacks to that? Because I always feel like if I had the power or a president of a certain country in Africa, I would make the country the same. It's like more open to these kind of things to invite more funding. But what are probably the cons to this?
That's quite an interesting question. So obviously the cons to that would be attracting also bad actors to your country, and if one or two scams happen within that kind of regulatory framework, it draws a lot of scrutiny to the watchdogs of that country. But I still think that there's more pros than cons to bringing in new business. It's in essence a form of foreign direct investment into the country. So I don't think a country can have too much. However, if countries also need to look at their monetary policy, so cryptocurrencies have the possibility of not making monetary policy as efficient. So people can actually find various ways to, in essence, bypass exchange controls. And how countries operate is they use their interest rates to kind of control the movement of the economy. Obviously when an economy is growing, they want to lower interest rates so they can actually if it's growing too rapidly, they increase interest rates to keep that under control. And if it's obviously too sluggish, then they lower interest rates. So if they lose control of that monetary policy through cryptocurrencies, that could be a huge risk. So it's kind of a bit of a give and take on that part. Because with cryptocurrencies, in essence, you don't have to go through a centralized party. Yeah. It's decentralized. And that, in essence, allows freedom of movement of capital. Mm-hmm.
So one thing that I wanted to discuss from that very point is that, so if you have regulators coming in the space trying to fix it or whatever, we worried about institutional investors if they, for them to make it comfortable for them to come in, right? But the way it is, it's not perfect for institutional investors, but it's perfect, I think, not perfect, but it's great for a lot of people, individuals, right? Do you think then if more regulation come in, it's going to start to prohibit the individuals to the point that now it's just going to become saturated like the traditional market is, where it's now more permission that for you to invest as an individual, you can't actually do it?
That's also another interesting question, but I do think that governments need to definitely not be too heavy-handed. Because they can stifle innovation if they put the wrong incentives in place and the wrong regulations. So they need to basically nurture it. And what was quite interesting was if you go and Google the CFTC and SEC statements that they had in Congress, they actually made quite an interesting statement that they said that this technology is here, it needs to be nurtured, but at the same notion it needs to be watched. Mm-hmm. So I think if you have that approach as a government, it's definitely positive. But if you come in very heavy-handed and you stifle innovation, you're just going to chase money to the next country that is more open.
It could also be, it could invite institutional investors, but it would stifle the small little guy, which at the end of the day, this is what, brought this technology to this point. That people are finding alternatives to do things,
Well, I think the barriers are too low. The barriers to entry into the market are very low. I'm just talking for the ICOs. So anyone can start an ICO. I think that is very low. I think it does need to go through some type of formal accreditation or formal process to make sure that the people behind that ICO are kind of accredited. They do have a use case. They already have built the technology. They're just looking to expand it, and they can ask permission in that regard. But like you said, if someone's starting an ICO from their back garden, I think that's not really a positive thing. You need to put the ring fence it so that you don't actually have bad actors in the economy. But going back to what you were saying is, even if you look at our platform that we're creating with blocktrade.com, we have a B2B model, so the institutions can actually trade through the platform, but we also have a B2C model. So we're not going to be stifling that your normal individuals can't trade. So you'll still be able to sign up through our platform and actually do your KYC and AML and essentially trade as an individual. We're just putting steps in place to make sure that they know that they're operating within a regulated environment. We are doing what's required by the regulator, and we are watching for any suspicious kind of transactions on the accounts. And that should then give everybody more comfort when dealing with cryptocurrencies. We can't obviously protect people from the volatility of cryptocurrency, but the same goes for, we can't protect people who are invested in the stock market.
Sure.
So I think that the risk is pretty much the same from equities to crypto. It's just with crypto at the moment, it is in its infant stages. So because it's in its infant stages, it's still kind of finding its true value, and at the moment it's also very intangible. So whereas you look at normal shares, you can see that you can actually come to an evaluation of that share based on the company's assets. You factor in some other kind of economical models like the country's growth, and then you look at the management team, and then you can kind of say, okay, well, this share gives so much dividends, it should be X amount. Whereas with cryptocurrencies, there's a lot of kind of fear of missing out economics at play, psychology. It's very intangible. A lot of the products that are developed in the ICO space are software based. And I think for that reason, it's a little bit harder to evaluate. So that's where the risk is slightly higher. But looking at it in total, it's definitely a good asset class to add to your portfolio. I'm not saying go bet the house on it, but maybe put 5%, into alternative investments. And that can even be solar energy forms part of alternative investments.
Right.
So I would definitely say have a small chunk of your portfolio directed towards this, because like I said, 5-10 years from now, out of that crypto top 30 or crypto 10, there could be definitely one or two big winners.
So, and what are other projects that you're working on, and specifically in Africa right now? What have you seen that's going on? And where do you think are the key areas if somebody want to operate in the crypto space in Africa specifically?
Okay, so currently in Africa, I've got one project that I'm doing some advisory for. It's called goldma.io, or Gold Mining Asset. This is quite a unique project. I was actually last week, I was in Zimbabwe. I went to go view the gold mine operations and meet the team, just to make sure that it was a legitimate operation. And ended up meeting the team out there, and what this token is. So they're issuing a token through an ICO to take their existing mining infrastructure from a small to medium size to an industrial grade. And obviously Zimbabwe is quite a unique country because they've got heavy exchange controls. They are a dollarized economy, and not many funds leave the country, but they have a lot of opportunity. They've got very rich gold reserves. So for this is an interesting, because you're looking at the banking sector. You can't even go take out a banking loan in Zimbabwe without paying 25% interest in dollars.
That's ridiculous.
It's very ridiculous. So what's happening in Zimbabwe is it went through its kind of political transformation, but there's lack of liquidity. ICOs are a perfect kind of fit to, bring back liquidity to the country.
Right.
And also direct money from offshore within Zimbabwe to grow the economy. And as I mentioned, for this for gold mining asset, essentially the token will be backed by the profits of the mine. So now looking at other projects, that can have a wide impact, not only for their specific region. One of them is called Cherry.io or Cheerio, and they're in the charity space. So they've actually a project out of Slovenia in Europe, but their project has a wide sweeping effect. So what they're doing is they're taking the donation and charity space and they are putting it on a blockchain. They're allowing everything to be completely transparent. So you'd be able to see from the donor all the way to where that money needs to end up. You'd be able to track it all the way. But they've got a very unique model. They actually also won the Future Hack Award for most inspirational project that's meeting the United Nations Sustainable Development Goals. And in their model, you basically back a project. So say you want to provide $1 million to a South African children's home. You want to raise $1 million to actually build the school for these children. And what happens is you, as an individual, will go and back this project. You would back it and promote it. And what will happen is, if you raise the $1 million, the people that have all backed the project will get 10 to 20% back. So there's a specific percentage you'd get back. So you're incentivized to now go spread the word of the charitable cause, bring more people to the project, and at the end of the day, it's all for the good cause. And it's a clever way because it actually ends up incentivizing human behavior. So that's what they're doing, and I think it's, like I said, that has a very huge impact just on Africa. Because every year, billions of dollars from the developed world to the developing world all of a sudden disappears.
Yeah, it does.
Yeah, misappropriation of funds, politicians and government officials stealing. So I think the blockchain has a lot of use case for Africa, especially in the charitable and donation space.
I was telling the founder of Golix that blockchain technology or crypto is very appealing to Africans, because when you just hear about the concept, it just makes sense because you can relate to the problems that you are faced with. If you talk about charity and how the funds are being misused, it's like those are things that I've seen firsthand, because in many African countries, the easiest way for you to raise big money is to create like an NGO or whatever. It's kind of like the way for how people get rich, to reach themselves, not actually to manage their money properly. So, for a project like that, it's definitely helpful. But I don't know if those projects are actually built for, with looking at those kind of situations specifically, or just a generic thing. Because mostly what I've seen with some solutions that have been in that space, for example, they come down to Africa and you realize that the model doesn't work because it wasn't catered for that specific market.
That's also true, but I'm sure there can be a degree of customization for that. But with the blockchain as an example, as long as in the charitable space you're seeing where the source of funds are going through, and then they also release funds at various points. So once you reach specific milestones, then you can also see. So it's not just at the end, here's all the money, and then you can't trace it thereafter. It gets unlocked in specific portions. So if for the first 20% they haven't built up ground level and up for the school, then the next set of funds will not be released. So there's also a bit of a vetting process that goes on, human vetting. So even though we've got smart contracts, we've got blockchain, there still needs to be a human element, because computers don't know human emotions and feelings and how humans think. So we definitely need it's incorporated within the Cheerio model. So I definitely reach out to any listener on the show if they want any further information. I also provide my details.
Sure.
They can reach out to me and we can see how we can apply that use case to their kind of organization, NGO, non-profit, anything that's doing a good cause. I'm also here to assist.
Right. Is that a free model, the application, or?
I think there is going to be a small fee to implement the system. So we'd obviously have to get technicians out to implement it within the NGO, and that could be a small fee. But thereafter, utilizing the platform would be at a very minimal cost. Right. Because what will happen is per transaction will be a small fee taken, and that small fee is actually there just to maintain the infrastructure. These free models I've been hearing about don't actually make sense.
Yeah.
From a business perspective, you need funds to buy additional servers, to get coders, to get that human behind the computer vetting a project. Yes. And we need to align all kind of stakeholders' goals. So we do think that it's going to be a very worthwhile project, and I think it'll have a big impact on Africa.
You travel a lot, at conferences and stuff. What has been the most stupidest thing that you have seen on all these travels? Or the smartest?
Okay, so I've got something very interesting. So the CEO of blocktrade.com and myself went to the World Stock Market Exchange in the Middle East in Oman, and we were kind of the white elephants in the room. All the stock exchanges were there: Nasdaq, London Stock Exchange, Deutsche Börse, and we were the only kind of crypto-focused company.
Yeah.
But we were having quite a few interesting interactions with the CEOs of these bourses, and there was a panel discussion. I'm not going to mention who, but there was this one individual that was also from the crypto space, and he was on the stage, and everybody else is dressed in suits, and he walks onto stage and he says to everyone, "Guys, I'm from a startup, we don't wear suits." And he says this in a conference with all C-suite executives.
Yeah.
You don't have to wear a tie, but he rocks up there with sneakers, a t-shirt. It was actually quite amusing.
What do you think about that guy? Is he a very confident guy, or he was stupid?
Yeah, I think it was a little bit of both. I think the confidence turned into stupidity, but I definitely think you need to. I think the lesson learned there is you can still stay true to your cause, but definitely adapt for the environment.
Sure.
So yeah, it was quite an interesting one. I think that was probably one of the silliest things I've seen.
Yeah, right, and the smartest thing?
The smartest thing is one of the first conferences I went to. No, actually, one of the first ones was out in Dublin, the Blockchain for Finance conference. It was quite interesting because we had a presentation by IOTA. And I thought that was very impressive. They were speaking about the Internet of Things and how the IOTA protocol functions. So it was very, very enlightening, I think, from the Internet of Things perspective, and how the IOTA kind of functions in that ecosystem. And I remember that stage, I think it was like 30 cents. So
he used that a lot.
yeah. No, so that was very, very interesting. And also just, I think the use cases for me, that always enlightened me how, some financial institutions are using the blockchain to streamline various aspects of their business.
Yeah.
Another thing was even seeing that Dubai by 2020 wants to have everything on a blockchain.
Oh, okay.
So
2020, that's a big date.
Yeah, I know, it's quite interesting because in essence what's going to happen is, imagine a baby's born, they get an ID number. That ID number is on a blockchain.
Mm-hmm.
As that child grows through life, you'll be able to, on that blockchain, trace its whole history. So when you go, for your driver's license, it will be tagged against that blockchain. If you commit any felonies, against that blockchain.
That's a good and bad thing.
It's a good and bad thing. The bad thing is some people see it as the world order, but the good thing is,
Well, look, if that's true with anyone else and cannot be manipulated, it has to be public.
Yeah.
If it's not only seen from the government can only see, then it's a bad thing, But if it's a matter of, okay, if you want that, let's do it on all of us, the president, whatever. Anybody it has to be that transparent. Then I'm up for it.
Yeah, because then people will behave a lot better, I think. If people know that you're looking, they behave better. It's just kind of like.
But it's also limiting. It's also limiting because sometimes you set rules that aren't necessarily, they're not governing on really good things. It's like you have good intentions, but even if those situations have to arise, they're not really as bad. So it's like it limits creativity to some point as well, So because if you're from Dubai, say you're only supposed to dress like this, and if you don't, and then based on the Dubai government, in your blockchain, now if you didn't dress that way, then you're marked as some kind of a bad guy. For silly reasons.
It definitely needs to be used with caution. I think you are correct, but I think it'll be a combination of a private and a public blockchain. And I think there may be, I think the best thing would be is that you can also retain what you want to show, in terms of that private public.
Yeah, it's good if it's applied on everybody, not only a certain type of people. Sort of putting control on people. That I'm just against. But one thing that I wanted to ask, so for people that are working in the traditional banking system, whatever, or any other industries, they want to get into the crypto space and work there like you're doing, get involved with companies or hold some kind of positions. What's the entry level? Where can they start?
So I always recommend that you at least spend 2 to 3 months just familiarizing yourself with the jargon. It's very jargony, mining, Bitcoin, blockchain. What does it actually mean? How does it actually work? How does it fit into your normal understanding of the world? I would also recommend that you also start off, even if you're transacting in some form of cryptocurrency, but with very small amounts. It's very different to the traditional space where we're used to dealing with numbers and cents. Here we're dealing with fractions of coins. It's easy to make a mistake, and you need to also understand and see the value of the mechanism. After that, I definitely recommend doing, even if it's a short course, listening to your podcast.
That's a good
listening to your podcast, or watching some YouTube videos, and if you can, attend a conference.
Yeah.
I think all of that would give you enough knowledge to then start entering the space. But as I mentioned, Africa is a little bit behind, so I'd say give it maybe 3 to 5 years before you start seeing a lot of blockchain-based jobs popping up here in Africa. There are quite a few abroad. If you're looking at London, there's quite a few blockchain-based jobs. But yeah, I would definitely...
But I suppose the education part is pretty much the most important, because once you understand, you can sort of see where you can place yourself, right?
Yeah. So I did, I was a bit self-taught in terms of what I learned and what I did. But I also learned from the people around me. So I was very fortunate to be around people that are very technical, people that are very business and financial orientated. And then also even some people that are outside of my circle, philosophy, psychology, you end up looking at all of this as one. So it's quite hard to say you can go study that. So it's a little bit of experience in the space. But definitely try and learn from the people around you. I think that's invaluable, wisdom that some people actually give you. So it's a bit of a blessing in disguise.
Cool. So lastly, where can people find you? And, how do they hit you up if they want to know more or just to get in touch? Facebook, Twitter, blah, blah, blah. Yeah,
so I got Twitter. I'll send you all the social handles that you can put up on the podcast. So I'm on Twitter, LinkedIn. LinkedIn's quite a big one. I'm on LinkedIn. I've got my general email, and also you can also on Telegram. I'm quite active on Telegram, and I've got a Bitcoin Talk profile. So you can hit me up on any of those channels. I'll just provide you with those details. Sure. And then we can get in touch. So you're more than welcome to reach out to me on any of those channels. Any questions related to crypto, the charity space, the use cases, I'd be quite interested to see what you guys have to say.
Cool, thanks G. This was fantastic.
Excellent. Thanks, Greg.
Awesome.
Hello once again, and that was the end of our conversation. And just before you go, just want to communicate a few things with you quickly. If you have enjoyed any of the podcasts or this specific podcast episode, I would appreciate it if you share it with your friends and family through your social media, Twitter, Facebook, etc., as well as write me a 5-star review on iTunes or Apple Podcast app. That would be fantastic. It helps me flourish and sustain this podcast as well. Now, we're also on other platforms like SoundCloud, Stitcher Radio, and all other major podcast platforms. So whichever way you're listening to it, I would appreciate it if you leave me a review. You can also subscribe to the Greyf podcast through my website, greyjabesi.com, greyjabesi.com. There you also find some of the blogs that I'm writing sometimes, and you get notified as soon as the new episode has been published. Until next time, enjoy and be productive. Thank you.